following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. To master love, you have to practice love. The art of relationship is a whole mastery. And the only way to reach mastery is with practice. To master a relationship is therefore about taking action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials up 72, NASDAQ up 12, S&P's flat. Gold contract down $6.20, trading at $13.14 an ounce. Silver down 10 cents, $16.57 an ounce. Light sweet crude up 37 cents, $71.07 a barrel. Notes and bonds. You get the 10-year note down 5 ticks, 119.08. 30-year bond off 11, 142.25. The 10-year testing its low. Bottom line has light volume. We'll see whether that baby holds. 30-year also testing a low, not its low. Bottom line, 30-year also looks like it's going to hold. There's a difference between the 30 and the 10. The 10 has been the weakest. Down at the lows, we'll see whether it holds. King dollar up 34 ticks, trade 92.445. King dollar got to a lower low, rejected the low out here. Bottom line, looks like it wants to do a little bounce. We've been down for 3 days. I suspect we'll see whether we topped out last Thursday in King dollar. The euro's trading at 119.45 to 1 US dollar. The yen is at 109.62 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You have higher price. You have contraction of volume once again. 31 million shares. 31's going against 109, going against 294. It's a very large contraction, folks. We had a large contraction on Friday. We had a larger contraction out here today. The Qs are doing 16 million shares. On Friday, we did 24 million. This will bang out maybe about 22 today. They got to a high today of 170.82. And they're 169.85. The number to keep your eye on, I don't think we're going to close underneath it, would be 169.22. The Qs are right into the gap from the gap down on the 19th of March. We're going to take a look at the gold contract. What do we have with gold? They whacked gold coming starting around noontime out here today. Gold was trading at a price point of $13.22. And let's see when this thing started to go south. So this started to go south, yeah, 12:30. The pit closes at 1:30. They closed it at the lows. 13.15 is the number that you really want to keep your eye on in a big way. 13.15. The contract itself has been trying to get inside there since breaking down from the April 26th number. You got in it. We did get in it last week with volume, too. Bottom line, just giving it up. If we take a look at the silver contract, silver, different ball game. Silver contract, as well as some of the silver stocks, are actually much stronger than the gold and the gold stock. Silver right now is down 1.2% or 21 cents. That being said, you're at 50,000 contracts. This still has a long way to go before you get into a lows, and you're going into 76,000 contracts. So bottom line, silver, it does look a lot better out here. Notes and bonds. You get the note and bond market. If we stay with that 10-year note for a second, what you have with the note, we've done 810,000 contracts. Now, that's totally like contract volume because we're going into 1.6 million contracts, but bottom line, it hasn't held price yet, so that's going to be a big number. Let's go to John in Chicago. Hey, John, what's going on?
Hey, how are you, Tom?
I'm doing great, man. Yourself?
I'm doing well, thanks. Can you hear me okay?
Yes, sir. Thanks for the call. Appreciate it.
Okay, great. I wanted to ask you about the IWM. So this looks to me, and I've got a couple questions about it, looking at it different ways.
Okay.
This looks to me to be a classic timing the trade setup. And you'll have to weigh in on this and tell me if I'm wrong. So we're coming into, it looks like a triple top.
Yeah. March 13th and January 24th. Yeah.
Yeah. And we've got really light volume today. It pierced that previous high.
Right.
And then came back down, all the way back down. It looks like it's going to close as a down day today. Now, so I'm feeling bearish about this.
Okay.
And the bullish side, if you were to take the opposite side, just be devil's advocate,
yeah,
you could say there's a wedge pattern happening here.
Okay.
So we've got higher lows leading into this triple top. Personally, I'm taking the bearish side. And I wanted to just get your opinion on this and see how you felt about it.
So, yeah, I mean, as he dissected and bisected it, there's no doubt. I mean, today is a test of the high, and it's failed thus far. Now, what you also have, and this is where this gets intriguing. So, picture, the small caps, folks, have been the strongest indice when you take a look at the small caps, the Qs, the diamonds, or the SPYs. So this has been the strongest. It hit the top, and it's failed out here today. And it does have a high volume low that hasn't been tested yet, all the way down at that February 9th time frame. So
right,
it's not a bad setup. And, you know, yeah, I could, you know, because the bottom line is that you could put a stop right above it.
Right.
What you have, I'd almost wait to the close just to make sure they don't put 17. Yeah, there's no way it's going to be 7 million in this at the close.
All right.
Yeah, you got a failure.
That was
I mean,
my other question,
the bottom
actually.
line, yeah, your bottom line is you have a failure. I mean, you know, and this would be kind of like a classic that you made it up to that level at the finish line, and then it ran out of gas in a big way right there.
Right.
Let me put this
now,
back.
the other question would be, from your vantage point, would you wait until tomorrow to see if it comes down and ticks lower than today's low?
No.
Would you wait for that?
No.
Okay.
No. The reason, this is why I wouldn't. I don't do that. And the reason being is that when you get a failure, and this is like a really subtle failure, because you can really just look at it and say, hey, this is all at highs, and the market's not that bad, and it's a slow market out here today. Because what tends to happen is that if you're right, this small cap will basically come down about a point and a half at the open tomorrow.
Right.
And then then you have yourself insulated. You know what I mean?
Exactly.
Yeah.
All right. Thank you so
Cooking,
much.
brother.
You're a huge help.
Thanks, man. Have a great one. Have a safe one. Stay right there, folks. We'll come right back with our man, Mr. Steve Rhodes. You have the Dow right now up 90, NASDAQ up 18, S&P's up 2. Come right back. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 78. We get the Nasdaq up 14. S&P's flat. Let's go over to our man, Mr. Steve Rose, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve's got an outstanding program right here at TFNN every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, the Mastering Probability. The way you can get this Mastering Probability is you come over to our website at TFNN. You go to newsletters. You go to trading newsletters, see Mastering Probability right there. 30 days, money back guaranteed. Steve Rhodes, what's going on?
Well, you know, I don't know if it was a myth that George Washington cut down a cherry tree, but these Washington Capitals are cutting down our Tampa Bay Lightning.
That's for sure, man. That game was phenomenal, wasn't it? I know, man.
Well, you know, I've watched pretty much most every game since the Stanley Cup has played. It was a great series between Washington and Pittsburgh. You know, 2 great teams out there.
Yeah.
Pittsburgh certainly being the dominant team, and the speed and the strength.
Yeah.
You know, in the skill level, first one, it was just Washington, Pittsburgh. It was kind of like, you know, it didn't stand out as much. But these last 2 games here against Tampa, I've just seen a significant, maybe you've seen the same thing, just a significant difference in just the ability, the skills out there.
There's no doubt, man. Their brute and their brawn and their quickness is amazing, man.
It is.
Seriously.
It is. It is. So we'll see. Maybe I think it's Monday. I think the next game is Wednesday in Washington. So, you know, it's not over till it's over.
But the Lightning's going to have to step it up tremendously, man, because those guys are so fast, man. They're so fast.
Yeah.
And there's, if you haven't seen these games, folks, you want to watch them because there's been some great checking. It's a whole different series when they're going for the Stanley Cup. It is.
And the speed. You know these guys because you've played hockey, I've played hockey, so you know how your lungs, you know, are just burning. You know, you're still out on the ice. And then the ability for them to be able to pick up the puck and just find their wheels and get back down the ice. I'm like, seriously, man, that's it. Yeah, amazing. Pretty amazing. So, hey, for subscribers of Mastering Probability, not this coming Wednesday, but next Wednesday, I'm going to hold a workshop for them. You know how we do that periodically. Yes. So next Wednesday, I'm going to do a workshop for subscribers, and everybody can attend. You just have to subscribe to Mastering Probability. Right now, I've named it Deciphering the Markets. Follow the money, because currencies rule. So it's going to be May 23rd from 5 to 6. And like always, folks, if you can't attend the workshop, it's going to be available on your members page. We're going to take a look at how to determine how each market is performing in other currencies. How do I identify the swing points in other currencies? How do I identify breakouts and breakdowns? And what I'm also going to do, last month, what I did, Tom, is I did a workshop that showed subscribers the pattern that's been present before every single bear market in the Dow for the last 130 years. And a part of that is about really understanding Japanese candlesticks. So what the subscribers are going to receive this month is this workshop, plus we're putting on their members page a archive of workshop that I did, the Ultimate Trading Signals Japanese candlesticks.
Nice.
So for those of you interested, this would be a great time to come test drive the newsletter. And questions control really our focus. So, Tom, I ask two questions out there for our viewers, our listeners, and that is that if you're just trading, U.S. indices, you had a caller who was talking about the IWM. If you're just trading U.S. stocks or you're just trading in U.S. dollars, does it matter? The question is, does it matter what other currencies are doing? And then I'd pose this question: can two traders of the exact same thing, we'll call it a commodity at this stage, can one be a bull and one be a bear if they're trading in different currencies? So if we go take a look at gold, priced in euros and dollars, and I start with the January 10th time frame. So I'm cherry picking here, but just really to show, I make an example here. If we go to January 10th, gold price in dollars on a closing base, we're looking at line charts out here. So it's just looking at the closing day for gold priced in dollars at the top and euros at the bottom. So gold price in dollars was 1,319. It was already coming off of a nice uptrend from a low on December the 12th. And gold priced in euros, the bottom panel of our screen, was also in a nice uptrend coming from a bottom that had formed on December the 13th. But for the next 4 weeks, and if we take a look at the green line here, that's the starting point with gold priced in dollars versus gold priced in euros. So whereas those traders of gold in dollars said, hey, this is great, we've got a breakout, we're heading back to that prior swing point, it's a nice trend to the upside, because of currency valuations, those traders that were trading with gold in euros, they were not seeing a breakout in gold. So folks were wondering, hey, I'm buying, who's selling? Well, it was the guy or the trader across the pound that was trading in their local currency. For 4 weeks, gold basically went nowhere, about a $4 loss, and gold trading in euros was down to about 32 euros. So that type of divergence here, so we take a look at it, what I have found, Tom, is that type of divergence between gold and dollars and gold and euros, and that's what we had. We had lower highs with gold and euros, bottom panel, higher highs with gold and dollars. It's really the gold divergence in euros that is pointing the way. And in this case here, what we saw was a sideways move, a trading range, a correction, but gold was not really getting to break out as much as I would have liked to have seen it break out. What I want traders and investors to really understand is we're in a one world market, and it really does matter how your instrument is trading in other currencies out here. And what I have found is that sustained moves in gold, such as this monthly chart here for gold going back in the 2002 timeframe, and and congrats to you because you're the guy that caught that move from the bottom to the top out here, that it was also doing the same thing in euros. So we had the intrinsic value, or whatever the reason, the fundamental reason for gold to be moving higher, it was doing it in both of those currencies out here. In fact, if we take a look at the primary currencies, gold in dollars, gold in euros, the next two charts to the right are gold in yen and gold in pounds. You can see a sustained move needs to see the commodity or whatever it is you're trading really have traction in all major currencies. And so regardless of what your home currency is, you've got to be paying attention to how your assets are performing in those other major currencies. And that's what the workshop is all about, which is why I like looking at gold and other currencies. It is how I've been able to attain that #1 ranking. I still hold that #1 ranking in Timer Digest for gold for the S&P 500 for the last 12, 6, and 3 months. And what I'm really looking for, this chart is a daily chart. And on Friday, Tom, I think like about 1 o'clock or whenever it was I was doing, maybe it was in the morning. It was in the morning when I was doing my show because it was taped. I saw gold breaking out. It looked like a breakout, even if it's a descending trend or channel line, such as in a gold priced in yen or gold in Great British Pound, looked like we were having that breakout. And what gold in dollars has done is at least held support, this little consolidation that it's in from about the 1,300 to 1,360 level out there. So And the point that I really want to make, it's not just commodities. So maybe I cherry-picked the price just to prove a point out there, but it's not just commodities. I know there was a caller that was talking about the Russell 2000. This chart here for the Russell 2000, Tom, takes us back to 2007. I go back to 2000. When a market tops, it'll top in all major currencies, just as this chart here for the Russell 2000 shows. So I want folks to come on over, test drive the newsletter service. I'll teach them all of the tools that I've used in order to be able to get that #1 ranking in the S&P and gold and gold bolts is all I can say.
And folks, the way you do this, you come over to our website at TFNN. You're going to see right in the carousel, Mastering Probability. Get a great newsletter, 30-day money-back guarantee. Great workshop, May 23rd, 5 to 6. If you can't make it live, don't worry. We have great technology beyond your page for another 30 days. Steve, have a great one, a safe one. Of course, we look forward to the show tomorrow.
Thank you. Bye-bye.
Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go over and take a look at good old Amazon. So Amazon, folks, this is going to get really intriguing to see how this is going to shake out. Amazon's trading at $1,604, right next to its high for the year. The high for the year is out here. It's $1,617. Amazon. So Amazon is basically getting much heavier into the digital advertising market. And what they're going to do is that what this story is about is that they're test driving a new display ad offering that bottom line is going to definitely threaten Google in a very large way. So this is what the tool does. The tool lets merchants selling on Amazon's online marketplace purchase spots that will follow shoppers around the web to lure the consumers back to Amazon to buy. The company is inviting select merchants to test the new ads later this month. And, you know, I mean, if you've done any searching on the web at all, you know that bottom line is that once you search anything, it can be basically a car part for your car, something for your house, a vacation, you know, you search it once. Bottom line is that no matter what website you go to, all of a sudden they all start popping up right beside you. Well, that has been a big deal in Google. It's retargeting, and on that retargeting basis, they're making big dollars. Well, Amazon, started getting into the advertising in a big way a couple of years ago. But this is a whole different ballgame, because what this does, and also last week, Amazon, we were talking about this one story, Amazon was pulling its big ads on Google as of the 27th of April. I believe they pulled them all. So currently merchants can buy other types of ads on Amazon. The company has been giving more prominent placement to these sponsored products. The new tool lets these sellers bid on ads that will appear on other websites and apps, giving them a wider reach. Merchants will only pay Amazon when customers click on the ads, and that's a big deal right there. That you're only paying when they actually click on the ad, because what does happen is this: is that you can have the ad, someone can actually see the ad, so you can see the brand, and you're not paying for that. If they click on it, then you're going to pay. Amazon said it can help merchants target shoppers who have viewed their products or similar ones, according to the invitation to try the new tool that was viewed by Bloomberg News. The invitation didn't specify which sites or apps will carry ads placed through Amazon. This type of web marketing across sites and apps is a massive industry, but it's also sometimes a challenge to prove that the spots actually lead to actual purchases. French company Crypto generated $2.3 billion in revenue. So the biggest companies are Crypto and Google. Amazon's entry into this market shows the retailer is getting more aggressive in the fast-growing ad business. By 2021, advertising on websites and mobile devices will account for 1/2 of all ad spending in the U.S. That's amazing, capturing greater share than television, radio, newspapers, billboards combined, according to eMarketer. Man, that's accelerated really quick. You know, it's huge. Amazon's ad business generated $1.7 billion in revenue last year, according to research firm. So let's just see this breakdown for a second, because when you see what's going to be intriguing this for Amazon is that Amazon, their cloud service business is a huge margin business, great margins in the cloud business. Other than that, though, so their cloud service business in 2017 was $17.5 billion. That's growing by 55% over a 3-year period. That's big. Their business in general, though, okay, when you're talking about online stores, third party, that's doing about $140 billion. That is a small spread. The advertising business is a huge spread. So this is going to be a big deal. And if they only did 1.7 billion, I believe. 1 second. Yeah, 1.7 billion last year out of 237 billion. You can see they start bulking that baby up. Watch out. Amazon's Google brought in 95 billion from ads last year. Big number. Amazon has been using the ad business to boost revenue, helping to get bigger slice of transactions on its site. The company already charges merchants commissions for each sale via its marketplace. It also bills for storage, pack, and delivery fees. Some sellers, let's see, they're going to make this a platform and make money from it instead of doing it for the sellers pro bono. It gives sellers more reach, but they will have to pay for it instead of giving them for free. Well, you know what I see with this? This is where this gets really intriguing, folks. This does give small merchants a huge uptick in the aspect of a one-stop deal that if they do have a product, they could get really big at their business. That's what it comes down to. Because what happens is that the technology that they have is dynamite. So picture you have a product, you test drive the product, you test drive a few ads out there, you test drive about 15, 20 different ads, see what one is working. You catch one that's working, then the bottom line is that, yeah, you're gonna pay Amazon for the deal, but what ends up happening is that the deals that they negotiate with everyone are huge. So you can see what Amazon has been doing here. This is pretty cool, actually. So picture you have a business. You've negotiated rates down. You know that if you assemble a lot more businesses and you do the negotiation for them inside your own deal, you can do two different things. You're going to control the flow. You're going to have a less expensive price. You're going to be able to charge the merchant a less expensive price, and it all just keeps coming back to you. That's what it looks like that they're pulling together right now. So pretty wild. And in particular, when they first started, you know, as we were just going through that story, they had the aspect that if you're a merchant, you can send product to Amazon. They keep it in their warehouse for you. They send it out from their warehouse. That in itself is huge, because that means that you can just sit here on a computer, get products in, push products out over an assortment of different businesses. You don't need a store that just specializes in one or two things. I'm sure there's merchants out there that turn around and look and say, okay, what are the most amount of things that people buy seasonally from different countries, from all of the above? And that's that you start pushing them out there like that. I get a feeling Amazon is, let's go and take a look at Google. Amazon is going to be giving Google a run for their advertising dollars 2 or 3 years from now. Google right now is at 1103. And your high out here is 1186. Still not bad. Bottom line, though, that Amazon is one that can definitely compete with them. Some of the higher volume stocks out here today, oh, the casino stocks. Okay, so let's go look at this. So the Supreme Court came out this morning. Sports gambling. Sports gambling is unleashed now. The U.S. Supreme Court freed states to legalize gambling on individual sporting events, unleashing a race to attract billions of dollars in wages and getting a new heir into the gambling business, no doubt, in the states. The justice on Monday struck down a federal law that had barred single-game gambling in most of the country, saying it's unconstitutional. It's saying it's unconstitutionally forcing states to maintain their prohibitions. Nevada has been the only state with legal single-game wagering. Bottom line, folks, the states are going to be taking in a lot more money. So we'll find out whether they spend the money on infrastructure or just basically pocket it and just spend it on fluff. Stay right there, folks. Come right back. Dow's up 63, Nasdaq up 13, S&P's a flat.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go over and take a look at that oil market. So oil's been running out here, 71 bucks. The market itself, meaning how this came down in 2014, it does look like we can get into this price point of 75 bucks. $75 is the low of the 20, let me see, I believe it's 2008 and 2010 levels. Yeah, no, 2012, 2011 and 2012. That's $75. So it looks to me like that thing wants to get tagged. See, we had come down so fast in from 2014. 2014, oil's at 107. That was in July and June, rather, and by December we were at 52 bucks and $43 in January. So bottom line, looks to me like you're going to get up there. Now that being said, what you have is this: the XLE. Was it a confirmed ABC up? Isn't a confirmed ABC up? Your price point on that baby is about 78. We hit 77.61 today, and what's happening with the XLE? It's dying on the vine up here. So this is going to get intriguing, seeing how this is going to hit this high, because you have a huge contraction of volume, and it looks to me the oil stocks in particular, folks, they love trading in very wide bands. Big consolidations, and this is no different. The top of this consolidation is 78, and the bottom is 61. Let me pull this back further. I've seen them. They trade in these sometimes like 2 or 3 years at a time, which is really, really wild. Yeah, if we brought this back, you know, you're ballparking this, but the first time we hit 78 was in December of 2016. We get down to 63, 62. We go back up to 78. January. Yeah, we go back up there 2 years later. We go back down to the bottom 2 months later. It only took 2 months to go from the top of the expansion to, consolidation to the bottom. And then we took another 1.5 years to get up to the top again. So we've been in this consolidation now since basically almost 2.5 years. What's intriguing here, and this is where this comes, here, I'll bring this back now. This is where this comes and gets interesting, is just this XLE. You know, we had good volume last week. It did 97 million. You're going into 100 million. You want to just, I wouldn't sell into this because you're still finishing that ABC up. But if, in fact, we get a huge contraction of volume and you close under 77.47, that'd be saying that, guess what, that's the end of that move, and then to be down the other side at 64. What's intriguing about that is this, is that we had the IWM, we're talking about the IWM, the small caps. Well, there's a lot of oil and oil-related products, service companies that are in the IWM. So it's going to be intriguing if, in fact, that's the case. What bothers me a little about that is that there are also a lot of commodity stocks in general that are in that. And because of this gold contract, it's been having a hard time holding the 13 15 area, it's going to be like, okay, the commodities going south, period, and that dollar is going to start rallying back again. Thus far, you know, it looks to me like the dollar's topped out. It almost hit the December 12th high, just missed it, come off that high, had volume. Today, rejected lower price, so we'll learn a lot tomorrow where this dollar's going to go. Meaning that, do we go higher and you have a contraction of volume, or do you start going higher and the volume expands again? If the volume expands again, then the commodities are going to have trouble in paradise. Right now out here, you get cattle down 2%, you get wheat off 1.5, silver's down 1, gold's off 0.5%. Oil's up 0.5%. Natural gas is up 1.2%. Look at, oh my God, we got to go look at this. Soybeans are up 1.4. Let's go over to the natural gas market. This is about as deviant as you can get. In the middle of the winter, you had natural gas going south, and we were using natural gas beyond belief. Right now, you have injections coming in. Natural gas is looking to take out this consolidation that's been in place since February. You're over the highs the last few days. You're going into the high of the 26th, which is a 284, 2844. You're at 2840 right now. The volume's not bad either. This thing looks like it wants to launch this area. If we launch this area, this 280 to 287 area, you're going to be up at the $3 before you know it. And that's really intriguing, that when you have an injection, meaning that what's going on now is that there's more gas being put into storage for next year. It's saying quite a bit, saying that they might be putting it in storage, but the market is looking for more folks using natural gas during the summer. And you know, what does happen in the summer is that if there's heavy heat waves, yeah, you know, they'll use a lot. The utilities will have to push out a lot of natural gas. So we'll see where that baby shakes out. We go take a look at, oh yeah, so inside the, we're talking about the states. So the states now are going to be able to do football gambling, one-game gambling, all of the above. That gets put a bid under Caesar Palace, under MGM Resorts, and the reason that it's not under all of them is that this is going to have to do with what states they're doing business in. You can see Caesars, they caught a bid, 35 million shares. They actually get this is an ABC up. You know, we started out today at $11.90. This came out at 10:30 this morning, and you can see at 10:30, 10 o'clock, that's where it caught the bid. Went from 12.15 to 12.75, got up to 12.95, has volume behind the move, so that baby still wants higher price. That's Caesars. If we go over and we take a look at MGM, MGM's trading up 53 cents. That's a $32 stock. This is trying to recover from a vicious downdraft. This is repairing some of the damage, but on MGM, different ball game. 30.72. That looks like it still wants to get hit. If we go to Red Rock, which is a triple R, Red Rock up 2 cents, no big deal there. And Red Rock should also basically do quite well with the aspect of that they can, in individual states, now take gambling bets, because Red Rock is in a lot of states outside of Vegas, outside of Nevada, rather. Now, simultaneously, when this came out, let's go take a look at the big ones. It's not bad. Las Vegas Sands is trading 77.47. It was down to 76.52. It's not bad. Wynn, because these casinos are going to lose some bucks. Wynn's down $3.90. That's going to the top of its consolidation anyway. The top of the consolidation is 201. The bottom is out here at 162. Boy, a lot of these stocks are in just huge consolidations. You know, top, and what Wynn almost has, Wynn has a high volume high up at this 203. We hit yeah, you know what? No, last week last week I suspect that's the test. We went to 202.48 with 11 million. The high was 203.63 with 39 million. Now it's going to be cool this week. If you get any type of expansion of volume on the way down, that would give you the identification that yes, that's exactly what that was. That it tested the high, just missed it by a point, and now you're going to go into the lower end of the consolidation. 877-927-6648. We have the Dow Industrials up 52, NASDAQ up 7, S&P's down 1.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now up 39. NASDAQ is up 2. S&Ps are up down 3. If we go over to the composite, we take a look at this composite. Composite hit a price point out here today of 74.58. You're at 74.04. That would have to close, well, yeah, it's closing into the last 2 days. So that would be a failure on price and volume. What it's also doing is going into your downdraft from March 19th through the 21st. Yeah, that's a decent failure. 319. Let me see what the volume was there. So this is with the NASDAQ composite we're doing. We're looking for, on 319, you had volume of 2.3 billion. And right now we're at 1.7. So we'll probably do about 2 billion, but that would be a failure on price and volume. Let's go look at the NDX 100, the 3 Qs. 3 Qs out here, they got to 170.82. So you got over the highs, but it doesn't look like you're going to close. You're going into 71 million shares. You've only done 18. This would have to close under 169.22 to have a failure on price and volume. IWM that we started the show off with, That definitely, that's accelerating down now. It's just pretty cool, actually, from when we were talking with John in Chicago. Yeah, this is coming down pretty good. So that, it tested the 160.62, went to 160.69. 20 million shares, you've done 13 million, so this will do like 14 million. They'll throw $1 million in at the close. 160, yeah, this is a decent failure in price and volume. That would set up a run somewhere at 153 would be next. You wouldn't have to go to the lows just yet because the downdraft that was created out here on February 5th, the high of that downdraft will give it a little support. Stay right there, folks. Lots of numbers coming out after the close. We have the Dow Industrials right now up 40, NASDAQ up 3, S&Ps down 2.5, gold off 7.20, silver off 10 cents. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great week, folks. Kicking it to summer. What a trip this is, right? Release the need to be right. When you believe something, you assume you are right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials up 68, NASDAQ up 8, S&Ps down 1.5, gold contract down $7.10, trading at $13.13 an ounce. Silver down 10 cents, $16.57 an ounce. If we get over to that gold contract, take a look at it. What you're going to see is that they slammed it under the 13.15 once again. It had been building cause to get up above that level, did get up above that level last Wednesday and Thursday with force, by the way. And bottom line broke down again out here today. So 13.15 is a crucial number. And why is it crucial? Because that's the higher range. That was a consolidation that we had been trading in from the 3rd of January all the way over to the April 16th number. If we go take a look at the GDX, we take a look at some of the equities. They're not as bad, not even close, actually. Bottom line, though, I want that metal higher, too. If we take a look at the GDX pullback with 26 million shares. You're going to 40 million. That's still set up that it wants higher price. XAU, same setup. That wants higher price. That pulled back 40 cents. Gold Bugs Index, same type of setup. The equities themselves are acting pretty good. Gold Bugs Index is only down 39 cents. You're at 180, 185. They all want higher price. Silver, we take a look at the silver market. What silver did, you pull back 10 cents. Bottom line is that what you have out here is that you are pulling back with dramatically lighter volume. Actually, you pull back 21 cents. We did 51,000 contracts. That 51,000 contracts was coming into the 80,000 contract level. So you can see the bottom line is that you're going to need a lot more contracts to get to lower price. And the bottom of the range in silver is dramatically, well, it's not dramatically low. You're trading, it's $16, approximately $16.18 to $16.20. And what you do have is that the silver stocks continue to be strong. If you look at Pan American Silver, that broke topside last week. That's trading $17.68. It pulled back 42 cents today, but it pulled back with dramatically lighter volume. We're talking about 1.3 million shares versus your break topside of 3.7. First Majestic, if you take a look at First Majestic, that just made a new high today. Well, when I say new high, I'm talking about the last 3 months. 738, that broke topside on Wednesday. And even Hecla, which, you know, come out with numbers, the bottom line, that showed a sign of strength last week also. That popped when it came out with the numbers. $4.15 has the volume behind the move. That pulled back only a penny out here today. So the fight is still on inside that metal market, the physical metal market. Notes and bonds, same type of setup. We go to the TLT, the TLT first off, which is the 20-year plus bond fund. Little different setup out here. That did pull back. It pulled back 63 cents. Had volume of 4.9 million. The lower end of this range, though, is 116.51, and we're not even close to that. You're at 118.60. That being said, your 10-year, different ball game. Your 10-year is laying right at the lows. We closed out here today at 119.07. The low for the day is 119.06. The high of the low, which was generated out here on the 25th of April, is 119.09. So you can see what's happening here. We're at 119.07. 119.09 is the high, so you're into the high of the low. You do have 851,000 contracts, which is very light contract volume, going into the low, which was 1.6 million contracts. But bottom line is that you didn't reject the price. So tonight is going to be a big night inside the bond market in a huge way. King Dollar also came down, rejected lower price, did have lighter volume. We did 17,500 contracts, got to a price point of 92,115. That's coming into 27,000. So we closed out at 92,500, which when you're looking at that was a strong bar, the bar from May 1st. You get into the low, you run into the, no, you get into the high, you rejected the high, you had lighter volume that's saying, hey, guess what? This thing's going to bounce again, and we'll see how it handles the price point of the 92,700 to 93 area. Some of the higher volume stocks in this market out here, and this is, by the way, is let me actually go look at this volume again. We started, it was anemic, it was 523. Okay, they put volume into the, they put 744. Now it's intriguing, isn't it? When I started right at 4 o'clock, it was 523. You can see they put 200 million in at the close. Inside the composite, we did, the composite didn't put it in. The composite did 2 billion. So the composite was going against 2.3 billion from the 19th of March. That would be a failure on price, failure on volume. Some of the higher volume stocks out here today in this low volume market, you had Symantec was up $1.88. Now that stock had been down 33% on Friday. Don't touch that stock. That's a dead cat bounce. You get Advanced Micro up 28 cents. Micron Tech's up $1.18. You get NXP Semiconductor. This was a big number. So this is up $11.73. What this is all about is that Trump reversed himself, and bottom line is that the company in China that, bottom line, you know, was selling to Iran, selling to Korea, North Korea this is, bottom line, they put sanctions on. They're going to basically let them do business again. Who knows why? That is so bizarre. It's pretty insane. But bottom line is that so China opened up looking that Qualcomm can basically take a look at NXP again. So NXP was up, Qualcomm was up. Okay, some of the other high volume stocks out here. Marvell was down 10 cents. You had Neighbors Industries up 14. Facebook was down 35. MGM, well, the couple of the gaming stocks were up pretty good. You had MGM was up 52 cents, $32.33. You had Caesars up 65 cents, trading $12.55. In both cases, folks, what that's all about, that was about the Supreme Court came down this morning and said that individual states can now have single gambling, meaning football. And it's going to open up basically sports betting right across the whole country in every state. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 68. You had the NASDAQ up 8, S&Ps up 1. Now, folks, as you come over to our website at TFNN, you're going to see our man, Mr. Dave White. He is going to be doing a workshop. This is going to be Wednesday. And what this workshop is going to be all about, folks, is option trading near expiration with our man, Mr. Dave White. Now, what happens, folks, is that when you get option expiration, of course, that's on the, well, the monthly option expiration is always the third Friday of the month. Bottom line, Dave's going to be talking about different swing points, different areas that he feels that you have a very good reward versus what the risk is. The way you get into this workshop, you can test any of his newsletters, either the Path of Least Resistance, the Tech Insider. Bottom line, they both come with a 30-day money-back guarantee. You get into the workshop Wednesday night. Now, I got to show you this because this is, you know, we've been talking about this workshop. We've been talking about the aspect. I know how Dave approaches these things, and what tends to happen is that as you're coming up to the workshop in Dave's newsletters, he's talking about the different setups that are coming into play. And you got to see this. And it's not that this happens all the time. And Dave, in fact, you know, he's talking about this on his show today. You can't expect these type of hits. But this is so cool. And I just wanted to read to you what he actually said to his clients on Friday. Okay? So this was in his Path of Least Resistance. Okay? So we're talking about red hat options. So this was his quote on Friday. The range for the red hot options show that 90% of the time, the equity is going to close between 157 and 163 on options expiration. Now, what Dave's going to do, just as I just quoted what Dave said, he's going to show you and teach you how you get those numbers, okay? Because it's a statistical deal. So he didn't just pull this out of a hat. This is a statistical deal. We will cover the 90% range in the webinar, but each day we will publish a new range to let you know how it's trending, because there always are new ranges, because what happens, folks, is that you have the buy side, the sell side, okay? And bottom line, you got to put these babies together. An educated guess would say $165 is something attainable, but for a 5-to-1 play, we need the 170 May 18th put at around $1 to get in. Okay, so what Dave had advised his clients on Friday, to basically get in the May 170 puts at $1.20 or better. Well, bottom line is that they traded at that price. They could get in and buy them. That's the bottom line. This morning, what had happened in Red Hat opened at $172.49. Bottom line, folks, Red Hat went south as soon as it opened up this morning. Dave put another note out saying, guess what? Close the position up. It was trading at $165. The options that they bought at basically $1.20, they probably got around $5. Not bad, 300% in one day. How you get in the workshop? Just come over to our website at TFNN, and I'm going to show you the actual chart today, and I'll show you the options today, because this is so cool. It's really amazing, actually. Red Hat. And remember, it's only Monday, folks. So you want to go in this now, because as Dave builds up to this, there'll be different equities every day. So I have Red Hat up. You'll see that Red Hat opened today at $172. It went to a low of $163. Now the cool thing is that this opened up and laid up at the high for like 20 minutes. Yeah, 20 minutes. It laid up at that high in 20 minutes, then just fell apart. Now watch, I'm going to actually bring up the option chain, because when you come into option expiration, which we are right now, and that's why Dave likes doing this so much, and believe I used to do thousands of these, okay? What happens is that you can put a very small amount up and get a large amount very quickly. That's what you're hoping for, And if you're looking at my screen right now, I'm going to go on the right-hand side of the screen. You're going to pull up the 170 puts, right? So I'm going to hit them, and you're going to see the 170 puts closed out today at $5.86. That was the last close. And you can see there was a lot of them traded, too. Now, if I pull this up, what you're going to see at the very top of the screen, this is where this thing gets really sick. At the top of the screen, what you're reading is there were 249 contracts traded. The low, well, the option opened at $1.10. The high was $6.20. A low was generated at 93 cents. Can you imagine this? So the spread today was from 93 cents to $6.20, closing out at 5.86. Pretty cool. Congratulations, Dave. So come over to our website, folks, at TFNN. And as Dave said, if you listen to his program this afternoon, bottom line, he doesn't get 300 to 500% winners every day. Don't expect that. What you can expect, though, is really understanding how he bisects and dissects the option market, how he gets those numbers, so that, bottom line, two different things end up happening. You can get his webinar, you can get the workshop, you can get some good expertise that's coming in there, and then you can learn it yourself, which is really cool, and that's what we're all about here at TFNN. So check it out on the front page of TFNN. That workshop is going to be Wednesday night, 5 to 6 o'clock. Great workshop, great education. Out here, market-wise, Amazon. Amazon, bottom line, is getting into advertising, getting into the Google business. So this is going to be intriguing, watching how this whole thing shakes out. Amazon did $1.7 billion last year in advertising, but they came out in the middle of the day looking that what they're going to be doing is that they are going to be basically testing tools that you can advertise on Amazon, and as you advertise on Amazon, they will redirect your ads and other websites to keep bringing you back to your store on Amazon. I suspect that's going to be a big number going against Google as retargeting. Retargeting inside the advertising business, folks, is a big deal. As we move around the web, that when you go look, whether it's a shirt you're looking for, something for your house, all of a sudden, every website that you go to, everything starts popping up on the right-hand side because they know what you're looking for. Well, Amazon's going to start targeting that in a very large way. Walmart. Well, here, actually, what we have, let me see. Walmart already come out with numbers, I believe, but we're going to be getting, no, that's right. Walmart's coming out Thursday before the market opens. So a lot of retails this week. Thursday is Walmart. Macy's is going to be on Wednesday before the market. JCP is going to be on Wednesday before the market. SHLD. So Sears is they're gonna start liquidating in a big way. What you're gonna see in Sears, I suspect, when all said and done in the Sears deal, actually Sears, look at this. This is the small ABC up. So Sears, A point is 216. The B, yeah, it's a 216. It's $1.40. That gets you $4. Small ABC up. Stay right there, folks. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get over and we take a look at Ford. Ford's down off a high of 13.32 in January. We pulled this back. We put this on a weekly. What you're going to see here is that this has been on a downdraft for some time. Got a high volume. Let me put this on a monthly, actually. See if I get a high volume load here. Yeah, you do. So this is, oh, I see. This is a monster consolidation starting all the way back in 2010. So 2010, stocks trading at, $10. $10, the bottom of the consolidation. We're getting near it. Let's go look at GM. The reason I want to do this, yeah, GM down for the last 6 months from 46 to 36. Put this on a monthly. Yeah, this is trading back at 2013, so not as bad as Ford. But what's going on out here now? This is pretty intense, actually. So in the car market, right? Subprime auto loans. Borrowers in the U.S. are defaulting on some private auto loans at a higher rate than in the financial crisis. This is pretty intense. So lenders are responding by pulling back on financing to applicants with shaky credit histories and require higher standards for loans that they bundle and sell to investors. So here you go. The delinquency rate for subprime auto loans, which is more than 60 days past due, reached the highest since 1996 last month, 5.8% according to the March data. That compares with the default rate of 5% during the financial crisis of 2008. The number of auto loans and leases extended to subprime lenders fell by almost 10% from a year earlier. Now, let me show you something. Now, this is what's pretty cool here, too. So, okay, so any type of loans, folks, you know, the financial crisis itself, you had the loan, the mortgage company made loans, the car company made loans. They bundled the loans. Picture this. Picture the banks make the loans. They bundled the loans, then they sold the loans as bonds, okay? This is what the difference is, and this is why these banks actually might be pretty weak right now. If we go look at Wells Fargo, they're a big lender inside the car market. Bank of America is a big lender. They're all big lenders. Now, this is what the difference is, and this is what this article is also about, too, is that these particular loans, there are only 10% of these loans that were actually bundled into securities. The rest of these loans are on the bank's balance sheets. So this is going to get intriguing, because what we had before is that you didn't have the aspect of most of the loans on the bank's balance sheets. they basically had sold them as securities. Now, they were on the hook for some of those securities, and that's how that whole thing went south. But the bottom line is they sold them as securities. The difference here being is that they've kept them on their books. Yeah, and they're saying it's 10%. So they have about approximately $390 billion on their books. They only sold off approximately $40 billion inside the securitized market. So if we go take a look, let's go look at Bank of America first. So, and I can picture why they wanted to keep them on their books, because the bottom line is that these loans, I don't know what the interest rate payment is, but I suspect it's probably pretty good if it's a subprime loan on a car, never mind a house. A subprime loan on a house, you know, if the interest rates are 4.5%, you're probably going to be paying 6.5%, maybe 5.5%. On a car, I just don't know what they are, but car loans are more expensive. I know that, and the subprime loan is going to be more expensive, and that's why I suspect that they are being kept on the bank's books. Now, it doesn't mean that they can't securitize them now, but that'll be a lot tougher when the rate has been going up of defaults, because anyone that's buying them on the other side knows that. Yeah, you know, Bank of America, you know, none of these banks can get any traction. They still look like Bank of America's at 31. Looks like it wants to go to 28. Let's go take a look at, let's see. So Bishop Holdings. This is the retail brand products at a discount over the internet. The company retails through flash sales. This closed at $15.09. This is trading at $12.57. What a hit this is. Holy cow. Oh, my God. So what is this? Let me see what this... I got to see when this thing went public. So this is Bishop Holdings. Okay, so it went public March of 2012 at $6. They do revenue. Oh, what is this? Oh, there's the revenue. Okay. Man, they do a lot of money. Holy cow. So they're doing $92 billion. Let's see what happened to this stock, man. Whatever this is not good. Okay, so Bishop Holdings, they see revenue 20. Oh, it's a China company. I got it. 20.5 billion won to 21.3 billion won. They had expected to do up to 22.2, so that was light. Revenue, they expected the range to be 3 billion to 3.2 billion. Now it's going to be 3.1 to 3.0. Earnings per share, they thought the estimate was going to be 17 cents. Now they're looking at 15 to 19. They have 56 million customers, though. Whatever this company is pretty intense. It's pretty intense that it's down $2.50 also. So at $2.50, there's a gap. Well, it's not going to. This is going to end up filling this gap, but this is pretty intense. So this had gapped up in December from 8:30 up to 12.60. You're going to open tomorrow at 12.60. So now it's going to be right into the gap. And now you're going to have a problem in paradise, yeah. Oh, interesting. And Citron is saying that this company is a fraud. Oh, yeah, they're going to make some money on this. Okay, so let me see this for a second. Okay, so I don't have the short interest on this either, which is unusual. Big problem, though. No doubt about it. Let's go take a look at Allergent Technologies. This closed at $69.21. This is trading at $64.20. These are taking hits. This is $5 down. $5 down here, too, is going to put it at the bottom of its range. So let's see what they have to say. The estimate was 64 cents. They made 65. Revenue estimate was 1.21 billion. They made 1.21 billion. Bottom line is that they did what the market was looking for in this quarter. It must be the next quarter coming in. Yeah, it's going forward looking at the third quarter. They had estimated 1.21 billion as the bottom of the range, and now that's going to be at the top of the range. Their net revenue estimate, the range was $1.20 to $1.22. Now they're saying $1.21. Range earnings per share. It had been 65 cents. Now they're just looking at a big range, 62 to 73. Stay right there, folks. Don't forget, folks, you can come over, sign up for our man, Mr. Dave White, his webinar that's going to be on this coming Wednesday, 5 to 6 Eastern Standard Time. Check it out on the front page of TFNN. Coming right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. SYMC. So if we go over to Symantec, folks, on Friday came down 33%. Bottom line is that they reported that one of their former employees, bottom line, said they have some financial problems. They went to the SEC. They started an investigation. So you get down 33% on Friday. You popped 9% out here today. You're up $1.88. Be intriguing to see what this happens tomorrow, because Symantec just had a conference call, and they didn't say much. On the conference call, what they did say is that they don't anticipate a material adverse impact on its historical financial statements. Okay, so how far does historical go back? The investigation, this is their quote, is in the early stages, and the company cannot predict the duration or outcome of the investigation. Bottom line, what you can expect out here is more problems inside Symantec. Once the whole deal comes down as to the aspect of financial accounting, folks, it turns into a huge problem. In fact, let's bring this back on a monthly. I want to see what we have out here in a monthly. So, yeah, this is, yeah. Symantec has a high volume low laying out here at 11 to $9 to $8. This is going to be a problem. You have volume off the high. You're back inside the lower range. The bottom of the lower range also is the $8, and now you get volume down there. And it's not going to take much more to, let me see, I get that on a 20-year. If I put that on a 10-year, I'll put it on a 15-year. I'm curious to see whether it broke everything. No, it didn't break everything yet. So right now, you come down hard, no doubt. You come down from 29 to 18. Bottom line is that we'll see where this shakes out. Let's see what else they're saying. Oh, so Sears. So yeah, we were just talking about Sears, the SHLD. So what you have with Sears is a small ABC structure on the way up, $4. You're at $3.65 right now. And this equity is down from $125 to $3. So let's see what they're starting to say. News, they're exploring the sale of assets, including the Kenmore name. The retailer said Monday that it formally started a process to reshop the Kenmore appliance brand and parts of the home service business. It has hired Citigroup and Lion Tree advisors to explore selling. Oh, no, it had hired Citigroup and Lions advisors to explore selling 2 years ago. Sears spiked 19%. The assets are ridiculously priced, which is why they haven't elicited much interest over the year. One of the analysts said in the interview, Monday's announcement points to heightened liquidity concerns and cash crunch. Investors shouldn't have been caught off guard by the news. Chief Executive Eddie Lambert's hedge fund ESL said in April that it would be open to buying the assets and urged the department store to put the business on the block. Offloading the assets would help reduce cash consumed by the retailer's struggling operations. The once dominant chain had spent more than a decade trying to restore to his former glory. Lambert had used his own money to keep Sears afloat among declines. What I expect you're going to see here, folks, is this, is that they're going to sell off as much as they can sell off, and then you're going to see Sears go BK. And as to Lambert, I'll show you something how this shakes out, because this is, I suspect, this will end up being in one of the Harvard business classes and MIT business classes, Stanford business classes, the whole ball of wax. So Eddie Lambert owns 30%, or 32 million shares. RBS Partners has another 19. I'm not sure if they're the same. But anyway, he has 30%. He's a controlling shareholder. What he also did is this. In order to basically keep this thing going, he had spun off, let me pull this up. I just want to see. He had spun off a huge amount of their real estate. They had a lot of real estate. He had spun off the real estate and leased it back to Sears. And you can see the numbers went from $36 billion in 2014. They're going to do $16 billion in 2018. They plan on bringing that down another 25%. So they're going out of business. That being said, I suspect when all said and done, when they count up what Lambert actually got out of this, he probably didn't come in for a loss. You know, and that's pretty tough to do if the stock has gone from $120 down to $3. But what he had done over the course of time, and that's what I've been talking about this for years now, is that he took the real estate, has the notes on the real estate. He's going to end up being one of the biggest creditors, and he's going to end up with the real estate. And, you know, we'll see how the whole rest of the business goes. But the Kenmore, I think Kenmore is the only thing they have left that anyone will pay anything for, meaning the Kenmore name, because they, you know, you definitely they still sell a lot of Kenmore appliances, and those, I believe they made a deal with a lot of other stores. It used to only be Sears that would carry Kenmore line. Now I believe a lot more stores actually carry it. We might as well stay with weak companies. Let's go over to GE. So GE's at $14.71. GE's coming out with their numbers. They already come out, so they're not coming out again to the 20th of July, and GE's still in trouble. GE's going to, the difference in GE, it's not like someone was basically bringing GE down the whole period of time. GE, I suspect, built the hole in the ground way before 2007. So this has been going on a long period of time. They really were a financial company. If we look at GE, they turned from a manufacturer into a financial company, and what they got to do is somehow they basically didn't get rid of all the bad paper that they had going on coming into 2007. If you remember, GE, went from a price point of $42 down to $5.72, got bailed out, but guess what? They didn't sell enough, or they still had their names on too many subprime loans. They brought that up on their last earnings number, that they're going to have to basically push more write-offs inside the market. And of course, GE had the Genworth company, and Genworth, folks, was one of the largest writers of long-term health insurance. In the long-term health insurance business, anyone who bought one of those policies, let's say 15 years ago, probably one of the smartest things they ever did, because those policies are paying off in a huge way if people kept those policies. Because what also happened, I looked at a couple of those policies, so check this out. A policy, let's say a policy for 150 grand. They were selling these policies 150 grand. They were expensive. They were still expensive to people who were buying them. But then what they had inside these policies, they had that if you wanted to, you could buy a 5% kicker. And what the 5% kicker was is this. Check this out. It was a 5% inflation hedge. And what it did with the policy is that it upped the policy on a basis of 5% per year. And that's what made these policies so great for the consumer if they had that, because guess what? What have we done with inflation? We haven't gone anywhere. So those policies end up paying double the amount that I think GE and the rest of these policyholders thought they were actually going to pay out.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We had the Dow finish up 68, NASDAQ up 8, S&P's down 1. If we do take a look at the composite first, what you have the composite, NASDAQ composite, this is failed on price and volume, got into the highs that were generated out here on the 19th of March, couldn't handle the price, closed under the 74.21. We had traded to 74.58, closed at 74.11, did 2 billion shares versus 2.3 billion. IWM also failed on price and volume. It looks like a triple top out here. It's going to be intriguing to see what we get out here tomorrow morning. So got over all the highs, did 15 million shares versus 20 million shares, and didn't hold the price of 160.62. What we are also going to have out here, and you'll see a lot of this tonight coming across the tape tomorrow morning, is that most of the 13F filings are going to be in there. What the 13F filings are is that where the large funds, what they bought, and what they sold this past quarter. So the way the 13F filing does work is that it comes out 45 days after the close of the March 31st time frame, which that's where we're in right now. So you're going to see a lot of shuffling around out here. And in particular, I suspect we're going to be looking at, in fact, let's look at Amazon right now. It's going to be the high flyers that you want to look at. Well, you can look at everything, but bottom line is that the press will be all over the high flyers, that's for sure, the financial press. So if I took a look at Amazon coming into it, let me see, the latest changes. Well, latest change, oh, look at that. That's interesting. So the latest changes going out of it, that's a big number. T. Rowe Price sold, they own 3% of it, and they sold 1.7 million. You had Citadel sell 75% of his position. We had Fidelity. Oh, look at Fidelity owns a lot, but Fidelity starts selling. But they only sold a small amount. They own 17 million shares. They sold 374,000. Let's see if we get the buyer side. Buyer side in here. Oh, this gets interesting. So watch this. When I put the buyer side up, folks, yeah, you have more sellers than buyers inside Amazon in a big way too. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here. Have a great night, safe night. Look for the speaking right back here. 8 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.